if you've been paying attention to the stock market performance this past week, ever since the inflation numbers came out on Tuesday, stocks have been steadily declining. The most notable one has been the Russell 2000 stock index, which is a measure of your small cap stocks, and that makes sense because small businesses are going to be the first to succumb to inflationary pressures as they don't have the capital power and the market power that bigger businesses have to absorb higher cost. They have to pass that on to the consumer, which then if they raise their prices compared to their big company competitors, that makes them less competitive, and then they don't have the financial resources to play the long game. And so that has created this negative sentiment in the stock market. But it's really transpiring now to all stocks now. So if I take the Wilshire 5000, that's definitely dropped. The Wilshire 5000 is down by several percent throughout the week. It's down by 1.5%, and the Dow Jones is probably down by about 2% or so throughout the 5 days. So it's down about 0.5% because that's your large stocks. So large stocks are beginning to fall to the inflationary pressures that have been going on, and as I have warned in the past few vids. But the big one has been the Russell 2000, and the reason why I want to concentrate on the Russell 2000 is because as your smaller cap stocks go negative, that tends to lead where the bigger cap stocks and your tech stocks like the NASDAQ are going to go. So if I look at the Russell 2000 from the last 6 months, it really topped off and reached its peak back in March, and it hasn't reached that peak ever since. So for the past 4 months, the Russell 2000 has been largely flat or in a bear market if it doesn't reach this peak again, and I don't think it will. I think this is a signal that stocks are indeed about to go into a long-term bear market, and that this will start to really transpire in mid-August when the inflation numbers for August come out. So I think that those inflation numbers are going to be the nail in the coffin. And one of the reasons why I believe that is because we still have one last bit of good economic news to come out, and that's the GDP numbers for second quarter. But when they come out, that might push stocks back up a little bit. The Russell 2000 may even recover slightly, but then those inflation numbers are going to come out in August, and I think that's really going to start the bear market for stocks going down as they are dragged down, as I've alluded to earlier in my other vids. So I wanted to go over with you and show you what past stock market corrections, crashes, and bear markets, and show you, kind of illustrate to you about the significance of the Russell 2000. So in the 1987, which was a sudden stock crash, nearly all the stock indices fell at the same time. The Russell 2000, ironically, was the last one to really fall, but when it did fall, it fell by the most magnitude. But in the 1990 recession, the Russell 2000 was the first to fall, followed closely behind by NASDAQ, S&P, and Wilshire. And then in the 1998 stock correction, this is not to be confused with the 2001 dot-com bubble burst, the Russell 2000 again was the first stock index to go negative and stay negative. And then in the 2001 tech burst, you have to remember this is more of a concentration of a bubble in tech industries. The Russell kind of just went midway. In the Great Recession of 2008, it was the Russell 2000 again that was the first stock index to go negative. With the oil burst, though, it was the fourth, not the first. So the Dow Jones was actually the first, probably because it had a lot of oil stocks with it, followed by the S&P and then the Wilshire. But in the 2019 stock correction, it was the NASDAQ and the Russell that went negative first, followed after that by the Wilshire, S&P, and Dow Jones. And then during the Great Suppression of 2020, which is what I'm calling the government shutdown forced recession, the Russell 2000 again went negative by a month ahead of time before the other stock indices went negative. So what's going on now? Well, the Russell 2000 is negative, and it's been negative for the past 5 months, if we include July. So what I think is going to transpire is that it's going to be a leading indicator that the stock market is going to go into a bear market. And right now, it's definitely forcing downward. Now, that being said, in past performances, the Russell 2000 would need to go below 10% before it would signify that a bear market has begun, and it's beginning to approach that level now. Okay, so it's at negative 6%, and that does not include today's drop. So if we include today's drop on the Russell, that's going to push it well over that's going to push it well over 6%, probably closer to a 7% drop, and put it back to where it dropped in terms of returns back in October. And you can see this downward trend is showing that based off the monthly returns of the stock indices, and every stock index is like this, the peaks are getting lower and the lows are going lower. So this is definitely showing you that returns on the stock market are going through a downward trend, and you can see this very clearly because this is when price inflation started to pick up. So as price inflation started to pick up, returns on stocks started to go down. Once price inflation reaches a high enough point, that's going to force stocks negative. This is the NASDAQ. It's a similar trend. Now, the NASDAQ has a more pronounced negative trend than the Russell does, but the NASDAQ bounced up in the last several months because, quite frankly, interest rates have gone low. Now, I'm going to do another vid. It'll probably be my next vid on what's going on with bond interest rates right now. Why haven't those bond interest rates been forced up with the inflation rates? And what I think is going to happen for the future of the bond market and how that's going to relate to stocks. But in either case, the tech industry has largely been believed to be very sensitive to interest rates, since for tech companies to function, they have to borrow large sums of capital to do their production. In any case, the NASDAQ does have that sharp return, but it's much more volatile. And I do believe that it will be the second stock index to go negative, unless if all of them tend to go negative at once, which is what's happened in times past many times over. The third one will be the Wilshire 5000. And you see that the Wilshire 5000's downward trend has been much calmer than the NASDAQ and the Russell. But now it is approaching that 0% threshold on the average. So it's still up in terms of monthly returns compared to last month, but it's barely up. Those returns are getting eaten out by the inflation numbers now. Okay, so in the last month, if we say that the returns were 2 to 3%, well, that's fine. But when your inflation numbers are pushing up by 0.91%, that's not really too much of real returns, even though those are record right now. Eventually that's going to push. Once that pushes below that 1% monthly return threshold, your stocks are essentially flat in real terms, and that's going to push it negative. And then the Dow Jones will follow behind that. The Dow Jones will mark closely behind it because that's your narrow, large capital stock. So your large capital stocks will be ones that kind of resist the inflation trends the most, especially during the initial phases as investors try to pile their money into safer hedged investments in the stock market. So they're not pulling it out of the stock market yet, but they're rotating it in different forms of equities. And the Dow Jones would represent some of the larger companies. So larger companies are viewed to be safer because they can actually absorb more of that cost than smaller companies. The same is true with the S&P 500. It'll be one of the last to go negative. But in either case, I do think the Russell will stay negative for the better part of this month, if not all of this month, and then confirm the bear market once it drops below 10% in mid-August, with the NASDAQ following suit, and then after that the Wilshire, the Dows, and the S&P 500 here. So again, this is not an exact science. I could be off a little bit. I could be early. I could be late. It could happen this month, but I don't think it will. And the reason why I think it will happen in August is because the last of that economic good news is going to be gone. Once those GDP numbers come out, yeah, they'll get interim reports here and there, but that's going to be your really last hurrah of real big good news. And as those inflation numbers are going to push up and up and up, that's going to pound those stocks into the sand, okay? So obviously this is going to be very bearish for stocks and bonds. Bond interest rates will go up from this despite what they have done in the last 4 months. And not only that, it will be bullish for precious metals. So I'm going to do another analysis outlook for gold and then do a valuation for silver. I may do the valuation for silver first, then do the outlook on gold, then do an outlook on silver as that comes out, because those are your real safe haven investments right now. It is not that I'm a gold bug that you should hold gold and silver all the time, but this is now going to be a decade where you want to own gold and silver. So much like the 1970s, this is going to be the time to own it. Stocks are just not going to net you the returns. Neither are the bonds. You're actually going to lose money inside stocks and bonds, not only in real terms, but I also think in nominal terms as well. But this will be quite advantageous for gold and silver for the time being. And as I've said before, this is going to last. These inflation trends are going to last as long as the Fed keeps printing money. And Jerome Powell and Janet Yellen have both reiterated that they're going to keep up with the accommodative monetary policy. They refuse to bring their heads out of the sand and acknowledge that the monetary policies are forcing up price inflation and that they need to take measures to contain that. So, these inflationary pressures are just going to continue to push up here. So I'll continue to post vids on this, as well as give you more of a general outlook, maybe give you kind of a projection on how bad I think stocks are going to drop in the next coming months and when. But again, I would take those projections with a grain of salt, because there's a lot of factors there, a lot of data that's just I can't get my hands on, and even if I could, it would be nearly impossible to forecast on. But I'll speculate on those and give you guys a kind of insight as much as I can. But one thing's for sure is I do think the peak is coming in the next month, so you need to prepare yourself for that and start rotating out of stocks and bonds and start rotating into precious metals, gold, and hard assets. Thanks for watching my video. If you like it and you like my content, please like the video, subscribe to the channel, and I post videos almost daily, so pretty soon I'll post the next one, which will be on the bond market in the next day or two. So thanks for watching, and until next time, I'll talk to you later.